decade, the blockchain economy has moved in cycles of hype and retracement booms, followed by crypto winners, but this next phase looks different. Around the world, clearer rules and growing institutional adoption are pushing blockchain into the financial mainstream, and here in the U.S., lawmakers have passed the first comprehensive crypto framework, setting strict standards for stablecoins and clarifying who regulates what. The result, a shift from speculation to infrastructure, and blockchain moving into payments, settlement, collateral, and enterprise computing. In short, it is becoming part of the financial bedrock. Well, joining me to weigh in here at the New York Stock Exchange is Cleve Mesidor, Executive Director of the Blockchain Foundation. Cleve, great to have you here. Happy holidays.
Happy holidays. I'm thrilled to be here, especially following such an intense December for crypto policy.
Yes, so 2025 and the final month of this year has been quite the time when it comes to clearer regulation and, of course, what's up ahead for 2026. So what do you think the impact of all of this will be and implications?
Well, we're still waiting for some of the implications, especially when it comes to market structure and the Senate bill. There's a lot of activity. All eyes are certainly on the Senate market structure bill. We saw a delay on a potential markup in Senate banking, despite Tim Scott meeting with the industry this week, meeting with staffers and his colleagues. And we saw Blockchain Association, the Digital Chambers, CCI, send a letter to the Senate urging them to do a markup in January. But also, we have a looming shutdown debate again in January. So can we actually get at least a markup of the bill in January in Senate banking and hopefully Senate Ag?
And you do bring up an important point because we are finally getting key economic data points for the U.S. economy, and that delay was a result of the longest U.S. government shutdown in history. But as we look ahead to 2026, there's also the potential threat of another shutdown, but 2026 is a midterm election year, and for people on both sides of the aisle, we know that digital assets are going to be something that we're all watching and taking part in. So what are your expectations in terms of what we can see on the ground in the nation's capital?
Well, in market structure, I think we're going to move forward. I think we're going to see a markup. I don't know if it'll be in January, but it will be in the spring. And we're expecting rulemaking for the stablecoin bill for Genius. The FDIC just this week announced a process for banks to become issuers of stablecoins via the subsidiaries. So the FDIC outlined that process. We saw NCUA say that their guidance for credit unions will be following. So there's going to be a lot of rulemaking, because I think July is the deadline for the rulemaking for the Genius Act. And then certainly if we can get a Senate bill passed on market structure, we'll have to go to conference with clarity on the House side, and the two bills look very different. So there's going to be a lot of activity this year in a midterm. Not to mention, we've seen a financial war break out with the incumbents, with the traditional banks, with Wall Street, and crypto, right? There was a letter from Citadel. And just this week, again, yet another action. The banks have announced that they've created a 527, a political machine to compete in the midterms, because they know crypto is going to be competing from a political standpoint. So whether it's policy in Washington or at the ballot box, crypto is going to be top of mind.
Absolutely. And you just mentioned a key point there. So as we head into 2026, of course, Wall Street is going to be watching to see what the nation's capital does in terms of legislation, but it goes without saying that legislation does take time. And so in terms of timeline, for American viewers out there who are watching right now, what does this mean for the retail investor?
Yeah, and I think that's the retail investor is so important, and that's the element that we're not counting on. There's this scuttlebutt that will Democrats in the Senate move forward and take action or delay because of midterms? And no one's thinking about not just the retail investor, but consumers. This time, they're asking for clarity. They want the rules of the road. They want more clarity so that they can invest. Because of cryptocurrency, we have the largest population globally, even here in the U.S., that are participating in decentralized finance. And not just the industry, not just banks, but the consumers and retail investors are looking for clarity, and they're going to demand it, and they're not going to want to delay. And I think they're going to get what they want ultimately, but the timeline is going to be very difficult, especially with all of the different milestones. There's also the 250th anniversary as well, and all of those activities. So I think it's going to be a roller coaster year, but I think there'll be some action before midterms, because I don't think consumers, the marketplace wants to wait another year for the clarity we need for this industry to move forward.
Yeah, and speaking of moving forward, of course, when it comes to economic equity, that has lagged behind financial innovation. And you and I have met throughout the country this year at conferences, and here we are year-end at the New York Stock Exchange. So this is a financial institution with many publicly listed companies. So it really does speak to the adoption we have seen, not just this year, but also in 2024. So as we move ahead, what do you think needs to happen when it comes to economic equity?
Yeah, I think this is the first time we're actually debating a market structure with consumers participating, right? And I think the last time was Dodd-Frank. So this time, for equity to happen, we need real investments in financial inclusion. We need financial education investment. Disclosures are not enough. Disclosures don't go far enough. We keep talking about consumer protection, which usually means protecting people out of opportunity and access, saying that this is for this group and this is not for that group. And that won't hold this time. Consumers want opportunities to build wealth, and that means, as we're debating market structures, we're looking at the future of regulatory policy. There needs to be real federal investments in financial education. Whether you're going to invest $2 or $2 million, there's risk involved, and financial education is important. But we also have to move forward from the traditional model of consumer protection and patriarchy. Right? We need to make sure there are guardrails for all consumers, all investors, but we also need to make sure there are access points as well and lead with that.
Okay, Cleve, well, we will have to leave it there, but always wonderful having you on the show. Thank you so much for joining me, and thank you so much for sharing all of your insights and your perspective.
Thank you.
Thank you.